Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, August 26th, 2008. Well, as we get into today's video, folks, we're going to discuss a little bit about this light volume action in today's market. We're going to look at the overall daily charts and really focus in on where we see this market next week and the following week. Because as we know, we're approaching the holiday weekend. Volume is extremely light in the dog days of August here. And we'll kind of figure out where exactly this market's headed over the next week or two. And we also will expand it maybe to look at the larger time frame. Where do we see this market going in the next month or so? All right, in tune with that, I'd just like to mention that the webinar will be starting in about 2 hours from when this video is being currently produced. I do encourage anyone to quickly sign up for that webinar, as it is a 2-night series on our methodology, and we will do them every 2 weeks or so, so it's not a big deal, but this one was done during the night to help everyone that couldn't do them on the weekends take it. Alrighty folks, so let's get right into the analysis part of the video as we look at today's price action. Now, the interesting thing about today, aside from the light volume, was that you had a little bit of fluctuation on the front of the financials. Now, financials had a few ups and downs, but before we get into that, I'd just like to briefly touch on what the market did. Today we saw the Dow up 26 points, the Nasdaq was down 3.5 points, and the S&P was up about 4.5. So you can really see the light volume in today's market as the S&P futures really just did about 1.4 to 1.5 million contracts. That's a very light day. And also you can see that the flip-flopping of the market, as yesterday we had gone to a neutral stance on this market, was basically flat. All right, you had 2 indexes up that we follow and 1 down. Now, looking at the intraday chart as you are, you can see how it was just that type of day. There's really no direct trend in the market. You have a couple pattern formations, but nothing really succinct for any sizable move. You can see right here, ever since the morning, you saw a little sell-off early, then a bounce back, a retest down, and another move back up into the 200 intraday moving average. Alright, so off of that, you can just see that the market was flip-flopping around quite a bit today in a tight range, and this is a very, very tight range. Just drawing the lines in here from the general moves of the market, you're really only talking about a range of, I don't know, 6 to 7 points on the S&P futures, which is a very tight range considering what we've seen in this market lately. Alright, so enough of that. I don't really want to focus on the intraday because on the light volume it's just so inconsequential. But what I do want to do is focus more so on the SPY daily, on the Nasdaq daily, and on the various, maybe the XLF. We'll take a look at the gold. We'll even look at the US dollar index maybe a little bit today to try and gauge where this overall market is going. Now today we need to talk a little bit about commodities. Number one, small bounce in commodities. They were down earlier in the day, but remember, we have a new storm in the Gulf. We're heading towards the Gulf, Gustav, I believe, and it's aiming to be a Category 3 entering the Gulf. Looks like Sunday into Monday. So it's going to be a big issue if it continues on its current course, and in tune with that, we can change to the USO, and you saw the USO trading up about 80 cents today. Here's where it closed yesterday on the intraday. It opened up this high, retraced to fill the gap. By the way, that's a great buying opportunity. Gap fills on gap ups are always good in that type of situation where you have a large gap up. Gap fill, you'll always get a near-term spike, and you see that one. See this candle right here? Beautiful buying opportunity right here at the gap fill for a quick spike and a scalp right there. It even retests and gives you a second opportunity before rallying back up. Notice the one thing I would say about this, and let me just delete these couple lines here, is that notice how it pierced to the downside but never closed below the gap fill line. If you had drawn really from here to this point, you did pierce it, and that probably got a lot of the weak hands to go on the short side or sell out of their positions, but right away they were able to recapture it, and that's why you saw it move up very nicely here, pulling back into the close a little bit. So a nice little move up on oil, really just $1 on crude spot prices today. Nothing that crazy, but nonetheless a little bit of a gain. Also the GLD saw a slightly higher move. Here's where we closed yesterday. Here's where we closed today. Very, very small move up on the GLD, but a move up nonetheless on this commodity after a pretty big drop in the previous couple days. Alright, now one thing I want to touch on, let's go back to the SPY daily now, is, as we flip to the daily, is this continued trend line action. Alright, and again, folks, here's the trend line we've been eyeing very closely. You have the 2 moving averages right here, the 20 and the 50, which are now crossing, and you have the market just flip-flopping. And remember, going all the way back, and just to reiterate, the key here was the breakdown at this point, but we never confirmed to the downside. Notice drawing this line at the lows of the breakdown where we closed finally below this trend line, still have not broken that line. So support remains this line big time. All right, and you're watching this mark right on this computer here. This is what you have to watch, this line right here. All right, on the upside, you're still flip-flopping around. You're in really a trading range and a sideways motion below. We can extend this trend line upwards here, and that is going to be resistance. But you'll also have some resistance right around these moving averages. And whichever way we break, if we were to break above this 20 moving average, I would anticipate another touch of the upside here and a possible break, but we'll have to eye that again closely in the coming days, as the light volume today really, and for the next couple days, is really going to make it tough to gauge this market until we get some good volume back in it. But in any case, just to note this chart, simply put, you guys know we want to keep things as simple as possible. Support right here, resistance right here. All right? It's as simple as you can really make it, okay? Now notice the declining volume. This is classic volume prior to the holiday weekend this weekend. It needs to be noted as well. Any type of these moves can be accentuated on light volume. And let me move that back in focus. All right, so keep an eye on that, folks, that is definitely important to watch. Now let's flip, or quickly, let's just touch on a couple odds and ends here on this chart. All right, you also have resistance at this point, but notice how this line is going to come in and cross. All right, so this will eventually, you extend this a little further here. Let me see if I can do that right now. It's going to cross right up here. That'll be a lot of resistance. If the market were to move up into this cross of these two resistance points, I would look for a near-term pullback. But again, we'll focus on that as we get closer to that. Right now, we still have to stay above this line. Okay? On the downside, you're talking about supports. If that line were to be broken right there, right here, and all the way down at the double bottom range, all the way down here. Now, our bias, folks, is right now neutral still. We had a downside bias Friday after the close to Monday. We got the sell-off we anticipated. All right, we moved to a neutral bias yesterday. We had a flat day today. We're going to maintain that neutral bias with a, you could figure maybe a slight little inkling to an upside because of the light volume. That's the only reason you'd ever kind of contemplate an upside, is because of the light volume going into the weekend. But for normal, we're just going to keep it at neutral, guys. The market could go either way in light volume action. It doesn't mean a whole lot, frankly, because of the light volume. Unless you get some heavy volume, it just doesn't mean that much. We get back next week into mid-next week, then we're talking back some volume in this market. Traders are back from the Hamptons, they're back from their holidays with their kids, and back, all the money managers are back in practice and rocking the markets with high volume. Okay? All right, so keep in mind, but again, just looking out, and I mentioned in the beginning of the video, we want to look at a little further now. Talking into next week, mid-next week, late next week, we are continuing to look for that upside in the markets after that pullback, all right? But again, you really want to focus on this. We just don't anticipate this downside being broken. If it is broken, you'll have good support here, and you'll see if you bounce back up. But again, looking out a week or two in advance, we do anticipate some more upside in this market after the correct calls we've made recently. We are looking for that. All right, let's look at the Nasdaq quickly. Nasdaq, continuing to be the weaker index here, and you can see the massive move up. It had such a big move, it's really got to take a little breather. We called for the pullback on the Nasdaq here after it had broken, and a lot of people got fooled on this. We did not. We called it correctly. Nasdaq pulling back to the 20 where we called for a bounce. You got that bounce back to the 200 moving average, at which point we called for that sell-off on Monday, and sure enough, it did happen. Now, you're really hovering right on the 50 moving average here, all right? That's the key where we went to today. Where the Nasdaq was at the low. That should be good support, and in this light volume, I wouldn't be surprised if that holds. Again, even the Nasdaq, even though it is the weaker of the indexes right now, again, being the only one negative today, we are anticipating more upside within a week or two. And again, flat over the next few days is the most likely scenario based on light volume, to maybe a little bit of upside. But going into mid to late next week, I think there could be some more upside in this market on the forefront. Support-wise, you have support right here on the Nasdaq. Next area of support seems to be right around here, just analyzing quickly the charts as we go. Then obviously right around here, and ultimately down in this range. All right, anywhere between these two, that low right there and the bottom right there would be somewhere in between here would be the final support where it would have to hold. You break this key support to the downside, we're all in a lot of trouble, and that may happen. Looking even further out, aside from this little bit of a push we're expecting over the next few weeks, we do anticipate a possible another downdraft coming in October-ish. And again, I know that's so far out, we don't really want to pay attention to it, but just keep that in mind, folks. all right, going into your trading and so forth. All right, on the upside resistance, you obviously have this moving average right here as being key resistance on the Nasdaq, and then this point right up here would be the next key level to look for on a daily view. All right, let's quickly look at the XLF, because the XLF is really consolidating here, and you can see what's happened. You had that giant move up, and ever since that move, you really focused in on somewhat of a channel. I mean, that's what this is, really, right? I mean, just drawing in as accurately as I can, you have the tops and the bottoms. And right now we're focusing in on the bottom, but you see the good support right here. Very, very good support on the XLF on the downside here. Upside resistance, talking right here at the 20, and then should we break through that, maybe you do test the high channel. But either way, you're going to have to break out of this. You break out to the downside on the XLF, well, then we're also talking about maybe a move down to the lows. We'll analyze it as we go, but that's really all you're looking at right now. You're looking at first support, first resistance on this, all right? You could even look at a nearer term resistance, a micro resistance level, which would be right around there on this chart. But if we're looking at a little broader scope of things, that would be there. All right, folks, enough of that. Keep in mind, relatively neutral going into the rest of this week on light volume. Join the Swing Trade Alerts, join the chat room, watch for the new website. Take care.